Ladies and gentlemen, it's Mark Brown back here with your 2-minute turning point update from Pacific Opportunity Capital. So today we're going to talk a little bit more about details of sources of information for investing in junior resource stocks. And this is a risky business. You cannot be an overly crazy optimist or an over negative pessimist. You need to be a realist. As Rick Rule says, you need to follow the facts and not the narrative that you hear from all the companies. So look at the facts. And where can you find those facts? There's lots of good sources. One of them is brokerage firms. The brokers themselves get into deals, promote companies, and are a very good source of information. You can understand they're sometimes getting paid commission, so you need to understand they're recommending things sometimes that they get paid extra on. Also, you can get information from analysts at the brokerage firms. They're supposed to be independent. Generally they are, but generally they cover companies that they like to get work from. So often they're financing those companies as well, but that's okay because they're usually only financing really good companies. So that's a great source of information, getting brokerage firm analyst reports. Another source of information that I look at a lot is newsletter writers. Newsletter writers often are paid by the company, so you have to discount those ones a little bit. But again, they're only going to pick good companies that they think are going to do well simply because they make more money by recommending and get more followers if they recommend good stocks. So that's important for them. The unpaid independent newsletter writers are a very good source, but often you have to pay for those newsletters. So that's okay because you get what you pay for in so many of these circumstances. A couple of things I do sometimes, there's big conferences that go on, and sometimes I do a conference trade. I will look at all the companies attending a certain conference and say, hey, wow, these are good companies. I like these 3 of them. I'll buy their stocks a couple weeks before the conference, knowing they'll be promoting at the conference, and then I will sell them probably 4 weeks after the conference. Quite often you make a 10 to 15% profit without too much risk, just because you've got more buying coming in on these companies. So that's an exciting way to do things. It's really important that you do pay attention to the details, and I'll go through some of the details that I look for in future reports. Another thing that I like to do is look at a bunch of different newsletter writers and see which stocks that they all recommend. So one newsletter, or say 5 newsletter writers recommending one stock, it's probably a good bet that it's a pretty good investment. You don't want to invest if it's got up too fast already, but you never know. Sometimes these things have lots of legs, and you need to look at the history on the chart. Last thing I want to mention is one of my favorite things to do on junior resource stocks is to get in early at the discovery stage. A lot of these stocks get ignored on their first few drill holes. They don't get too much attention. But once they get into a good session or a good deposit, and they're drilling something exciting, if you think it's going to get bigger and bigger and bigger, and then they get to a resource estimate stage, wow, that can add a lot of value for the companies. And so can a PEA or PFS, that's a preliminary economic analysis or preliminary feasibility study. Those things add value for these companies, bring in more and more followers, and over a very short period of time, maybe a couple of years, you can make a lot of money investing in those kinds of companies. All right, that's enough for today. Thanks, everyone. Have a great day.